Hey everyone, this is Lazy Trader. Today we're diving into Bybit futures, one of the cleanest and most powerful platforms for leveraged crypto trading. If you've ever wanted to understand how futures actually work, this video will walk you through everything step by step. Before we jump into the interface, let's quickly break down the basics. A perpetual contract follows the price of an asset but never expires. That means you can go long if you expect the price to go up or go short if you expect it to go down. And the key difference, you're not buying the actual crypto, you're trading contracts, which means you can use leverage. On Bybit USDT perpetuals, your profit and loss are calculated in USDT, which is pegged to US dollar. Now, let's open the platform. Go to Derivatives, USDT perpetual. Here is what you'll see. Chart in the center, order book on the right, order panel below, and your positions at the bottom. Don't worry if it looks complex. I'll break it down simply. First, margin mode. You have two options. Cross margin uses your full balance. Isolated margin limits risk to one trade. If you're a beginner, always use isolated. Let me explain leverage quickly. If you have $100 and use 20x leverage, you're trading with $2,000. Sounds great, right? But here is the reality. If price moves plus 5%, you double your money. If price moves minus 5%, you lose everything. And actually, you get liquidated even earlier. Open the liquidation calculator, enter your position, and click Calculate. You'll see your liquidation price. The higher the leverage, the closer it is. Reduce leverage, and the liquidation level moves further away. That's why you always need to know your liquidation price and place your stop loss before it. If you get liquidated, your entire margin is gone instantly. If this feels overwhelming, that's normal. Start small, or even better, use demo trading first. Let's open an example, ETH USDT perpetual. Choose limit order. Set your entry price slightly below market. Enter your size, for example, $100. Check your liquidation price. If it's too close, lower your leverage. If you're new, don't go above 3x leverage. Now set stop loss below entry. Take profit above entry. Click buy long and confirm. Your order appears in open orders. Once filled, it moves to positions. Here you'll see P&L, entry price, margin, position size. If you didn't set TP or SL, click on your position and add them anytime. Even if you're offline, they will still trigger. Above the order book, you'll see the funding rate. If most traders are long, they pay shorts. If most traders are short, they pay longs. If you hold positions long-term, this matters. To close your position, use market, instant close, or limit. Better price, lower fees. Remember, fees apply when you open and when you close, and leverage increases their impact. Now, let's simplify everything with a quick example. Bitcoin is at $100,000. You have $100 and use high leverage. You open a position worth $12,500. If price goes up, your profit can be huge. But if price drops slightly, you lose everything. That's why risk management is everything. Use stop loss to protect your capital and take profit to lock in gains. Without them, you're just gambling. That's it. Now you understand how futures trading works on Bybit. Start slow, manage your risk, and build your experience step by step. This is a Lazy Trader. See you in the next video.